My guest is Dr Ebenezer Onyeagwu, Group Managing Director and CEO of Zenith Bank. When we spoke last year, the bank was celebrating 10% growth in gross earnings. This year, that number is 24%. Ebenezer, how are you achieving this?
What distinguishes us from the market is that we see things differently, we do things differently. That's coming from the kind of values, cultures, and ethos that drive our business. You see this evident in the quality of staff we have. Not only are they the best talent, they are creatively expressive. So we are able to get opportunities quicker, interpret the trends in the market very quickly than others. Then speaking to the number itself, you will find out that in all the key markets where we compete, we are a strong number one or a very close number two. The key projects and key development driving business in the economy, you see Zenith being the partner bank. If you look at the non-oil export space in the last 1 year, Zenith has been able to demonstrate leadership where we control about 50% of that business. We've also made very significant progress in our retail and digital banking. You see a lot of creativity in terms of our product offering. You also see our staff very bold and audacious. So I would say that what is driving us really is the strong ethos, the culture of the business. Don't just do work, be productive, be innovative, be creative to do something different.
Now, one particular challenge you faced this year was the redesign of the Naira, which forced the bank to replace every single piece of cash for its customers. Can you tell me how you tackled this?
Paul, that was the most difficult moment. Announcement was made in November and the deadline was end of January. The time frame was too short. Two, there was underestimation of the amount of cash in the informal sector. We didn't have a correspondingly amount of money in the new notes coming in. So that created scarcity. The scheme was supposed to also lead us into making use of digital payment. But what became evident was that banks in Nigeria need to upgrade their infrastructure. In our own case, we already started the upgrade of our infrastructure about 18 months ago. We had to accelerate the completion of our Project Tiger, a completely new enterprise framework, putting all the subsidiaries in the same enterprise environment. What that does for us is that we can harmonize our IT talents and resources. We will be able to support our ubiquitous channels so that we can take on larger volume of transaction, be able to consume a lot more API. So I will say that in a way we are ahead of the curve in terms of building brand new architecture fit for purpose for a digital environment.
And what is your vision for the next 5 years of the bank? How is that culture and creativity going to move you forward?
First is that our Project Tiger would have been completed. Project Tiger will give us that opportunity to create very massive dexterity in our platforms. So in the next 5 years, we are going to be leveraging very strong IT capability to extend our franchise, build a lot of products to address different verticals in the business space. Next 5 years, we also want to expand our franchise. Currently, we are processing our license for a presence in France. That will see us getting 1 or 2 presence in Francophone Africa markets. We expect that retail and digital banking in the next 5 years should almost be 50-50 with our corporate, commercial, and banking business. We see a lot of opportunities. We see a lot of heavy lifting to be done in the next 5 years. Where we need to compete, we are not scared to compete. Where we need to collaborate, we will collaborate.
Thanks for watching. Learn more at zenithbank.com or click now for more from this interview with Zenith's GMD and CEO. And as always, please subscribe for the latest international business insights from worldfinance.com.